Okay, good morning, everyone. Let me start with the overview on what's happening last year, 2021. So this slide, this one is showing the main ETF when, especially for those who are investing in ETF. So IWDA, this is the developed economy. QQQ, this is the Nasdaq 100. S&P 500. VWRA, this is the one that usually I will recommend for those who don't want to do stock picking, because this VWRA will cover the entire world. EIMI, this is the emerging market. So it seems that the entire 2021, right? Actually only EIMI, which is the emerging market, that is struggling. I think most of the underperformance is caused by the China. If you look at the constituents, right, I think the largest, let's say, except for TSMC, the other three largest are companies like Alibaba, Tencent, Meituan, and also quite a sizable Indian allocation as well. So this one is struggling. The rest are all doing quite well. So VWRA is just the average of these. So it's 18%. Not bad, actually. The average is only like almost 10% over a long-term period. But in 2021, 18% is not bad. So this is like 1 year view. If we look at the 2 years view, right, actually it looks different. Because, you know, if we look at the 2 year view, we can see the drop during the COVID crisis, all drop together, right? So regardless of whether you are in tech or you are in emerging, developed, everything drop about the same magnitude here. After that, I think the tech pick up first, but in 2021, you go back to this one, right? S&P 500 and QQQ is about the same. But if you look at 2 years view, you can still see that QQQ is still leading, and then the rest are all about the same. Of course, this EIMI, because of the 1 year, didn't go out as much, right? So you can see there's some underperformance here. So very different compared. If you look at 1 year historical versus 2 year, they are all very different. And of course, if you extend the horizon to 5, 10 years, they all look very different again. So all this, you can see that there's some cycles. So within 1 year, some geographic location will outperform, some will underperform. So it's very hard to say that, okay, QQQ is the best, it's best for the last 2 years, right? So it will be good moving forwards. This one is very hard to say. So prediction is always hard. Let's look at a couple of single names. I pull out the big one. So these are the so-called FANGS stocks. Or now the new acronym is Mamatan, right? Because of the change to Meta. So this is 1 year view. So if you guys watch my most recent video, I also shared that, okay, in my portfolio, I think Nvidia, Microsoft, these are the one that is leading, because I have a okay-ish allocation to these names, and they really went up a lot, right? So Nvidia go up by 125%. The rest are doing quite well also, between 30 to 60%, all the FANG names. The ones that is struggling is actually Amazon. Amazon is almost flat the entire year. Facebook, okay lah, so. So this is 1 year view. If you look at 2 years view, right, again, it is very different again. Tesla, of course, in 2020, after the stock split and inclusion in the S&P 500 and turn from loss-making become profitable, of course, it went up quite a lot, right? So I think it's like 700% in 2020, and then another 50% in 2021. So you can see that it's already 10x. So if you invest in January 2020. So the second one is Nvidia. Then the rest are all also doing quite well, like between 60 to 140%, all the FANG names. So they are, you know, all these names, right? If you just sum it up together, they are taking a larger and larger proportions of the entire S&P 500. So this is just a quick overview for those who didn't pay much attention to these names. So you can see this is a chart that a table that I take from CNBC. So it just shows that, you know, just within 1 year, right, you see the market cap, right? You thought that their market cap is already very big, like 2 trillion, around like 1.5 to 2 trillion, right? After 1 year, they just become like almost 3 trillion. Apple is almost hitting 3 trillion. So the rest will follow. They are not too far behind. You see, Microsoft is already 2.5 already. So Tesla and 1 trillion. Facebook is the one that is slightly smaller, didn't increase as much because there's some headwinds also. We'll go through that later. Let's move on. It's missing. This is Apple. Let's take a look. The left-hand side is actually the revenue. Right-hand side is the net income. So you can see that they are doing quite well. You see, Apple, right, it's not like they just become profitable recently. They actually became profitable for quite some time ago. The worry is not always their profitability. The worry is mostly on their growth, whether they will continue to sustain a high growth, right? So you can see that period, let's say between 2019 to 2020, right? So there are period that the revenue growth is almost flat, and then people start to speculate that, okay, phone sales all will stagnate, they're already saturated, so no growth drivers. So usually that's that kind of factors that will affect the share price, because, you know, once you look at the growth flatten, if you do extrapolation, you might say it might drop in the future, right? So that's why there's worry. But in the recent 1 year, you can see that also because of COVID, you see their growth rate pick up again. Their service revenue also increased. So it's actually doing quite well. So you can see that the trailing 12 months, it just become flat, then suddenly go up again, right? That's why share price also follow. Their net income is always looks good. So this one go up, this one also go up, because their profit margin is always keep at a very decent level. So what's happening with Apple's, right? So if you look at, in terms of the outlook, right? So I think around 1 to 2 years back, they announced the M1 chip. So they are not doing it immediately, right? So they first roll out with the iPad, and then the MacBook Air, and then more will come. So I think what happened here, right, is that I think all this M1 chip, if you have any friends that just recently bought MacBook or this new computers, right, you can ask them what was their review on the M1 chip. So far, the review that I got is that this is super, super good. So especially for those who are running, let's say, like video editing, all the stuff that require more GPU power, right? So this is really, really good. So what it means is that their sales or their market share in the PC segment, right, it will actually increase. At least that's my expectation. So that's one, right? But all in all, for Apple business, right, their PC is only just a small portion of the total. The iPhone revenue is still constitute the largest proportion. So the Mac is like just complement their entire product offerings. It's not really something that can drive the entire company's revenues. But that's on the performance and the quality of their products. But another thing of this M1 chip is really their profit margin. Because if you know, before they moved to M1 chip, they are using Intel chip, right? So by moving to M1, they are using their chip that they design in-house. So improvement increase. At the same time, their margin actually improve. Even they drop the price for the M1 chip. As in, price is actually cheaper compared to the Intel. So I think the margin is something that can drive their earnings forwards. So this is why, since this M1 chip announcement, and also track the review, watch some YouTube videos, right, about their benchmark, all those things, battery performance, all looks good. So I think this is something that is quite good for Apple. So I think looks different here, the font. So this is the Mac computers. You can see that it's already like picking up. So I think this one will continue. Definitely something that I'm quite bullish on. Yeah, again, I think the font just messed up when I shift here. So I think that's all about Apple. So of course, there are a lot of things to say about Apple. For example, their VR headset, their service, all the things, right? But I just pick up one, which is the M1 chip. So, but I think I'm very bullish on Apple. So still my top holding. Anyone want to share anything or any view? Because if not, we will jump to the next companies. Okay, no. The second company, let's quickly go through Microsoft. So Microsoft also looks the same. You see Apple's, right? If you look at the chart, right? Okay, this is Apple. You can still see there are some seasonal, right? So usually like December or the Christmas season, they will have higher sales. But you look at Microsoft, right? It's just much more smooth, and their 12 months rolling is just going up and up. I think this is partly also because of their business model. They actually shift towards more like those subscription. So subscription is always something that can help the companies to smooth out their revenues and their earnings. But in terms of growth, also you can see that it's getting a lot more stable. I think this is not like just the entire lineup or their offering just become like constant growth, right? But there's some strong growth within their business lines. For example, like those cloud business, they're growing very high. So there's some that's growing low. So they offset each other. So all in all, their growth is like 22% in the most recent quarter. And then earnings, you can see here is almost flat, right? Then suddenly here just picked up. So you can see when their market cap, right, is jump from, let's say between this period is less than 1 trillion, right? Then here suddenly just go up by like a couple of trillions. I think this is, we attribute this to the success of the management. Satya Nadella is really, really good, good CEO. So really good transformations for Microsoft. And then you can see the earnings also goes up a lot. So I think this is something that is very, very good. If we look at in terms of the outlook, right, I would say, let's say their teams, all the offerings for the enterprise user, I think they are doing a lot of innovation. So you still remember during COVID, right? I think Teams is just still quite new at that time. It's just video conferencing, but throughout the entire, in the past 2 years, right, they just keep on putting on new innovation into the products. For example, make it more engagement to use Teams, and they are really pushing hard and grab sizable market share when compete with the Slack, right? I think their competitions. So I think they did a good job there. But I think if we just look at 12 months ahead, right, I think their revenues, income, all these things were just almost like secured. Not much risk, because first, their product is quite sticky. Customer do not switch out easily, because their customer are mostly enterprise customers, right? So, let's say for retail customer, if the product is not good, they will just switch out. But if their customer is like those companies, right, switching from one provider to the other, sometimes the process is quite lengthy, quite mafan. So they will just keep it. And at the same time, right, they are actually increasing the price that they charge to their customer. So you see the price increase is not like 3-5%, So it's just like, okay, Microsoft going up 20%. So all this, they announce now, it's not effective immediately, but it will take, let's say, 6 months or 12 months to implement all this, right? Then by the time they are implemented, it's not news anymore, because this will become old news, right? But you will see that, okay, yeah, you just track their financial statement, you can see that, okay, it's just going up. One reason is just because they raised the price. So, not something that is good from a long-term perspective, because you can't just keep on doing this every year, because your customer will run away. But let's say just looking at short-term, after they do this, revenue increase, then share price also follow, because usually shareholder will get, they will panic if the revenues doesn't grow, but as long as they are growing, right? So I think this investor will just stay invested. It just shows that they have pricing power, right? Yeah. So this is one news that I put out. This is quite recent one, December 2021. This one actually came out quite some time ago. This is August 2021. Office 365 prices will go up. So they already announced. I think these news are usually not appreciated enough. I think people will pay attention to like, new products, what is the new innovations. But actually, I think these are the stuff that will drive their revenue and net income. I think I'll just continue. We will take the discussion at the Q&A. So if you have any question, you can raise there, or you stop me anytime if you have anything to share. Okay. Let's quickly move on. This is Google. Google, I think, is doing also very well. If you look at the recent 2 quarters, they just from a very high base, right? They just increased another like 40% year-on-year growth, right? So for mega cap that can grow 40%, this is really, really impressive. And they went through the same phase, right? You see, 2006 to 2008, they can also grow at, let's say, 50 to 70%, but that's from a very low base, right? After that, the growth actually stagnated a bit, but just recently they go up, right, 40%. All this also because of COVID. You know, advertising or go to online advertising instead of those offline one. And you can look at their revenue also like going very smoothly. Earnings also doing well. You can see it's like it's not just growing. You see, it just very flat grow, and then suddenly just within that 2 or 3 quarters just pick up like exponentially, right? So I think they are doing very well. Yeah, if you look at the financial statement, and they are named as the top big tech stock of the year. So I pulled up a couple of points from this article because I think this is I think provide a very good summary in the past 1 year. So I think first one is the advertising revenue go up by 43%. Very nice growth here. And then the second thing is on the, you know, Facebook, Snapchat, they are all affected by the change of the privacy changes, right, from Apple iOS. So they actually dropped quite a fair bit. But if you look at Google's, right, because they have Android, so they are not so affected. I think also thanks to like when we consume, how to say, when all this online advertising that came from Google's, right, quite sizable actually came from the YouTube. So I will believe actually still quite sizable, or most people will still watch YouTube on their PC and not iPhone. So they are less affected. So this is something that definitely helps. And then advertising rebound in 2021. Their cloud business is also doing quite well. The last one, this one is the multi-cloud trend. This is something new to me. I haven't really paid much attention. Recently, there's this Amazon outage, right? So I think they happen, and then after a couple of days, they happen again. So there's this trend saying that because of companies like this one called HashiCorp, right? I think they are like infrastructure provider. Probably they're helping some this enterprise when they have different clouds provider. It's just sitting on top, helping them to manage different clouds. So this is something that if they have good service provider like this, right, make it easier for companies to use like a couple of different cloud providers. They could use like Azure and then AWS and also let's say like Google Clouds, right? So if you have this, actually help them. So it becomes like a good backup, right? So Amazon outage, you can switch to the other. I think this is something that is quite interesting. And if there are good provider like this, right, I think it's not so good for Amazon AWS because they will actually affect their dominant positions, right? Because you see from a customer perspective, they also don't want to like just expose 100% to Amazon, right? Because if Amazon outage, their service also get affected. So I think this is something that worth pay attention to, because in my view, right, all this cloud AWS is a economy scale, is a it's a numbers game, right? The larger you are, the easier for the cloud providers to actually manage their business, because essentially they are renting out all the processing, all the CPU power, storage, all these things. So if you have dominant position, a big market share, is actually easier because you have economy of scale. But once these providers come out, I think it will actually reduce the power that can come from the economy of scale, because I think from customer perspective, they also don't want to like just 100% relying on Amazon, given their reputation also. So this one definitely will pay attention. And then the other one is they cash out, right? For example, like UiPath, Duolingo, Freshworks, Toast. These are the investment that or companies that IPO last year. So I think they also gain a fair bit. So that's why their price actually go up quite significantly. Come back to Kelvin question. Just now you asked about gaming, right? So actually, why don't you share what was your view on the question?
Okay, actually I'm just curious because I have not used the M1 chip before, and I'm not a hardcore PC gamer. So I do not know what are the economics behind the this industry. So from what I know is that PC gaming is quite big, and also the users or the consumers in the PC gaming, they tend to upgrade quite often. But maybe where I'm coming from is that if the M1 chip has that large performance leap in terms of performance, right? Would that pose a sort of maybe a different or a disrupting move or something towards this PC gaming? So would consumers go to M1 in the future, or would developers start to develop more games for the iOS, the Mac platform? So I got a few chat from the chat group just now. They saying that there are too few games on the Mac, and also there's a graphic card performance problem. So I'm not sure on this technology. So that's why I just want to get a broad opinion and how will this affect in the future lah. But I think maybe if we don't start to think from like analogy, like in the history, last time people said, oh, because it was not done before, it will not happen in the future. But what do you think really will, let's say that the performance of the M1 is like 5x a normal PC, a comparable price PC with the graphic card, right? Would you want to switch if, let's say, M1 is like 5x the normal current PCs? Would you, as a developer, what about a developer standpoint, right? I don't know, maybe because of the lack of the market acceptance, but what if the developer said, if we build it, they will come, right? I don't know. So what, any opinions from there?
I can chime in, Daren here, because I work with gaming companies in my day job. So context here is casual mobile gaming makes up about 70-80% of the market. That's where the money is. And per hour of engineering effort that Apple puts in, they will make more money from iOS games than Mac games, precisely because of all the... It's not just reality, it's perception as well, Kelvin. So the reality is the latest M1 Max, they're already as good as the 3070 graphics cards on PCs already. But the perception also matters. Perception is nobody's going to make games for Macs, very few people are going to play it. So it's a combination of perception and reality. For Apple, where they're really going to make money from gaming in the short term will still be iOS. And in the long term will be AR and VR, where they're competing heavily with Meta on. AR, VR games will be basically where Apple will leapfrog from iOS mobile games into the AR, VR side. The Mac gaming side is a non-meaningful amount of revenue for Apple to work on. So it's a nice to have. They won't say they won't support gaming, but it's not going to be a major revenue or stock catalyst. So that's my view.
Thank you very much.
I also share a bit on my view in terms of this gaming, right? I think if you look at the hardcore gamers, so the type of games that they're playing, right? I don't think Apple's will actually how to say attract this group of peoples towards the M1 chip or the Apple ecosystem and platforms. I don't think that is the goal, and I don't think that will be the case, because I think right now all these games, right, they are still running on a very demanding GPU hardware, which M1 I don't think they are able to support as of now. So that is not their goal. What they're trying to do, right, is actually, like, for example, now on the iOS or iPad, right, actually quite a sizable of user actually play games on iPad. So the type of games also is, I would believe, less demanding compared to those hardcore one. But what happens is that I think because of this game that developed for, let's say, iPhone or iPad users, now you can actually easily ported to the MacBook as well, right? So definitely that will make it easier for those who will actually just port over and just play on MacBook. So I think that's something that is will actually increase over time, but it's not like we are taking from the same pool of users, you know. So it's just that, okay, they might develop on how to say different appealing. They appeal to different customer types. So the hardcore one might still stay with the current platforms, and then of course, the mobile gaming, all this will continue to pick up in the future. But let's say a couple of years later, when their performance is good enough, right? Let's say for a new game that will be developed, right? They might choose the current platforms like the PC, or they might go straight away to Apple platforms. This one we don't know, right? Because as long as there are enough users that pick up, right, then it become a very lucrative options for the developer to develop on Apple as well. So I think this is definitely very exciting time. But I don't think we should just expect that they will just take the customer away from the current business. So if we look at Nvidia business or AMD, right, I think they are fine. but just that I think the part that they can just put over is something that very low hanging fruits, I would say, because very minor details, and they can actually roll it out for the Mac users. Just my 2 cents on that.
Oh yeah, thank you.
So let's continue. I hope you can still see the slides, Alphabet. Okay, let's talk about Amazon. So this is Amazon. Actually, out of all these, I hope you can see the slides. Yeah? Let me know if you don't see anything. So if you look at Amazon's, right, I think out of all these FANGS stocks, I think their numbers is the one that is least encouraging. If you can see, they are growing very, very high, like between 30 to 50%. And then in the recent 2 or 3 quarters, actually they dropped, right? If you remember the other FANGS name, they are all going up. But for Amazon, it's not. If you remember, I think the last earnings release and the recent 2 earnings release, the share price actually dropped or doesn't go up as much because of disappointing result. And there's also a lot of headwinds as well. For example, like the outage that I mentioned just now. This is something that's not good, but I hope that they will improve. And then also there's fine by Italy antitrust. So for Amazon, right, I think whether it's in US or in Europe, they still continue getting all these fines. So I think they will be occupied with all this. So I think this is something that is not, it will become a headwinds for the company if their focus is all shift towards managing the government instead of like serving their customers, right? But in terms of their core business, for example, like AWS, I think those are still growing very nicely. No worries on that. In terms of their company culture, all these things, I think it's still something that's a solid quality companies. So in terms of long term, I'm not too worried. Just that let's say over the next 12 months, right? I think these companies may underperform compared to the other FANG names. Because of all these headwinds. And also for the COVID, for example, like Microsoft, Apple, they all benefit a lot from COVID, right? So because of this shift towards digital. But for Amazon, they say, okay, because of COVID, they actually spend a lot more because quite a sizable of their business actually involves those that is not digital, So for example, like logistics, all these things, right? So they actually spend more. So when you spend more, of course, they will hit the profit margin, right? So that's why their share price is kind of flat. But I'm not too worried, let's say, whether all these things, to me, is more like short term, right? So let's say even the share price flat for another year, I'm fine. I'll just keep buying the shares and build out the position. I think it's always good time to buy before they run out, right? But in terms of the valuation, I think it's also quite attractive. I think most analysts actually assign like price target of 4,000 for quite some time now, but they are still lingering around like 3,400, right? So definitely good valuation in my opinion. And I think that the part that is in terms of their business strategy, I think also quite nice. As in they actually spend a lot in their logistics, so not just within the US but also globally. So this is something that will actually improve their business, right? Because, when you talk about e-commerce, it's like, I think this one, Jeff Bezos also shared before, like, he asked, like, what will be the things that won't change 10 years, 20 years later? Stuff like customers want cheap, they want fast. these kind of things, right? So they are improving the infrastructure, especially on the logistics. So very encouraging, because if one day the other customer cannot catch up in terms of their speed, right? Because they are using all their in-house deliveries, right? So definitely something, it's a mode for the companies, but all this require a lot of spending. I think that's all on Amazon. Then let's move on. This is Tesla. So if you look at Tesla, right, I think let's say before 2016, right, you can see that the revenues is nothing, and then it pick up. And if you look at the recent 4 quarters, it's just another like exponential up again, right? So if you look at their growth rate, it's like 56%. This is definitely very decent growth. And I think based on our expectations, right? I mean, investor expectation, we expect that this one to continue at least for another 1 to 2 years because of the new their gigafactories in Berlin and also in US, right? So definitely very encouraging. But then the second thing is on their earnings on the right-hand side. The earnings, they have been loss-making for quite some time, right? So if you look at the share price, let's say between 2016 and 2018, when the loss is not just not making money and then the loss expand, right? Of course, this will have some impact to the share price, regardless of whether their sales still continue to go up, right? Then in around 2020, their profitability shift from negative to positive, and that's why the share price go up a lot. And now we can see that they are at a good positions, right? We are not worried that the company will be loss-making moving forward. So there's this change, a big change. Hence the share price go up a lot, like 10x in the past 2 years. But in terms of outlook, right, I would say still the business is like most of the business still depend on their delivery numbers, because that will drive their revenues like straightforward. The other business, for example, like energy, they won't have quite a big impact, right? Still a very small proportion. So I think we just need to track their delivery numbers. I think the next one that will come out is either today or tomorrow, right? For the Q4 delivery numbers.
Yes, it's coming out, I think, around night time for our time today, or past midnight today.
Yeah, very exciting. Look at their numbers. So I think this is definitely something that look forward to. And I mean, this one showing the revenue, right? But if you look at the deliveries, you see just the first 3 quarters of 2021 is already showing a very nice growth already. So you add 1 more quarters, you just see that this is like exponential up, right? And they are not done, right? This one will still continue to increase as they ramp up the production. So hopefully with higher productions, more economy of scale, their profit margin also increase. And then the net income numbers, right? Now it's still very low number, like 1 quarter earning 1.6 billions. This is very small number as compared to companies like Apple, Google, Amazon, right? So I think once this number, like 1.6 billion, become like a couple of billions, like 5, 6, 7 billions, that's where people say, I mean that's where the another round of change of perception will happen, because I think as of now, there are still people that thought Tesla is not making money. So they might need some time to adjust to the new reality, like, okay, actually Tesla is making money. So yeah, I think no more to add. Or Daren or Kelvin, you have anything to add on this?
I can share one briefly. So right now, the world's most profitable car company is Toyota, right? About 18 billion in annual profits. By next year, even if you just assume that Tesla takes this 1.6 billion in earnings and it's flat for every quarter next year, that's about 6.4 billion. That will make them the 3rd most profitable car company in the world, assuming zero net income growth from this number that Boon is sharing, which we know it's only going to grow. So I think what you have heard also from Boon, like investing is about investing ahead of perceptions as well. And Tesla is going to be very, very profitable from next year onwards. By 2023, they're probably going to be the most profitable car company in the world. Their net income for the 2023 will exceed 16, 17 billion, which is currently Toyota, the leader for profits right now. That's my take. Curious to hear what Kelvin has to say.
Yeah, Darren, I also agree totally with that. And from even that numbers itself, you can already see that on the product side, Tesla has you would just say like there are only four models, right? And their variants are also very is fewer than the competition. So you can see that the efficiency of Tesla, I mean, getting as much money out of every dollar invested is also very high, because if you see that what Daren has said, that that Tesla is now the third most profitable on only four product segments, or four models. But if you look at Toyota and the competition, right, they have like dozens at the best case, and some even like 30 or 40 different models across so many kinds of vehicles. So you can see that how inefficient that they are, because there are some segments which are loss making just because they need to have that brand in that segment, you know. So I think with Tesla focusing on just a few uh, very big markets, you know, segments like the SUV market, it really can only grow lah. It won't affect. It won't stay stagnant now, like what Darren said. So I'm also very optimistic, and I think you can also see the parallels, like how Apple is working on. I mean, we as consumers, we used to want a lot of choices, but I think now most of us will only want the best choice. So we do not want to make compromises. So I think Tesla is very well positioned to provide the best product in that price range in the future.
Thanks for the comment. Yep. Okay. I think let's move on. I think the next one is Facebook or Meta. So they changed names, right, to Meta Platforms. But in terms of the numbers, all looks very good. And in terms of the valuation, also Facebook still considered one of the cheapest one. But let's take a look on the what was the recent news, right? So of course, talking about Meta Platforms, we are talking about Metaverse, right? But actually, my own take on this is that it will take some time to pick up because in terms of their offering, I myself actually haven't used VR before. I also don't know how it feels, right? And in terms of the hardware and software, still require a lot of development. So we probably will see more, let's say, in the next 1 or 2 years. But in terms of for these entire lines to pick up, I think we still need quite some time now, probably let's say 2 to 3, 5 years to see if there's any let's say shift in terms of how we use this product. For example, like now during the work, I'm still using like WebEx or Zoom, right? So we might be using all these VR headset for after a couple of years, but still don't know. But let's see what they come up with now. But in terms of their current core business, I think they are doing very well. For example, like Instagram, 2 billion monthly user. This is huge number, 2 billions. And you can also see that if you use Instagram, you also can pay attention to the number of ads that is coming through in Instagram, right? Sometimes there are ads, sometimes there's a link that after you click, you move to the e-commerce. I think all this really just make the platform more comprehensive, and they can be used to drive all this e-commerce and also other segments. I think they are doing quite well in terms of their core business. So Instagram is just one, and the other one is, of course, their Facebook, right? And Instagram also come up with all the innovative products, right? For example, like the Reels, like they try to take on TikTok, right? So I think there might be some traction there, but I still think TikTok is still the best in terms of the short form content. So that's on Instagram. And then if you look at the online advertising, right, actually it is a duopoly situations, right, at least for Western world. So there's Facebook, there's Google, right? So they are actually disrupting the entire advertising business, right? So taking money for those who spend on, for example, like newspaper or the billboard or this, right? So online will take a greater and greater market share over time. And these two added, right, is already like more than half of the entire digital ad revenue. So Amazon is getting larger. It's like 10.3%. So it's like duopoly, mainly duopoly as of now. And if you look at the lines, right, actually Google's from, let's say 2016, it's like 30.5%. It's actually dropping a bit like every year. And Facebook is the one that actually go up. But like I mentioned just now, with the iOS changes, I think it affect Facebook more than Google's. Hence, probably this percentage might be, I think, flat or something like that. But all in all, this tool is still leading in terms of the digital advertising, right? But in terms of the others, they're all doing also quite well. I think all these are digital. They are, even if they are flat here in terms of their market shares, right? But in terms of absolute numbers, is still growing because the entire digital ad revenue is all going up every year. It's just much more engaging and much more easier for the business to track the efficiency or effectiveness of the advertising also, right? So all this is actually quite, I would say in terms of their core business, it's actually growing quite well. So no worry on that. It's just that now they are spending a lot of money on metaverse. We don't know whether it will pick up or not, right? So I think they try to shift the attention towards metaverse as well. I think they do it intentionally. We don't know whether this is because they might not able to grow like this kind of straight line up, right, for Facebook, right? So they just want to shift the attention away from this area. It could be that way also, we don't know. But let's check it. But I think yesterday, one friend asked me, like, you seems quite bullish on all these big tech companies, right? But why my Facebook allocation is actually so small? Actually, my answer is TikTok. I myself also using TikTok. I can see how engaging it is. So if they take up more and more eyeballs, right, from Facebook platforms, so actually what it means is that more business will spend advertising on TikTok rather than Facebook. So I think this is definitely something to pay attention to, because I think TikTok is still very, very strong. And they, as in now, it still serve as entertainment, right, for TikTok. I think this is, sorry. Did I mention? Yeah, this is the news, right? So right now, if you open up TikTok, it's just entertainment. But you can already see there's some advertising already. Sometimes you see, okay, it's outright just showing the products, right? You can see that that's ads running behind the scene, right? And then I think the next step is just to make the entire e-commerce like blend in all together. For example, you look at the ad, and then you just press on it, and then you can buy the items already. I think this will definitely come. You can argue that it's already here. It's just that maybe not so obvious, but it will definitely come. That's why companies like TikTok, they partner with Shopify, all this. There's still a lot of innovation that they can do that actually can put a threat to Facebook. That's why I don't dare to like make a huge allocations to this area unless we can see that TikTok is going down. But for now, it is not, right? It just surpassed Google as the most popular web domain.
Can I ask a question, Bunti, to you or anyone who has a point of view here? So the fundamental product and economics of TikTok is very strong, and you can see all the news. The question is, because TikTok is still under ByteDance, which is a Chinese parent company, do you all see any risk of the Chinese regulatory environment impacting TikTok like how it has Tencent when they couldn't even update the WeChat app? Or do you see that they've already spun out their global TikTok business to be so separate from mainland China that the Chinese government will not have a direct impact to them? What are your takes?
Yeah, actually, just now when you mentioned this, right, I think when the China regulations come, right, I don't think they will target like a company as a whole. They usually target the business or the activity within the country. For example, right, if let's say CCP come up with some new regulations, right, I think it will be something that will affect Douyin or it will affect the Toutiao business, right? They don't really care what's happening outside, right? For example, whether this TikTok global, they are doing well or not, right? Or they will have some negative impact to global citizens, right? I think CCP don't really care, right? They care about what's happening inside China. So I don't think anything that they will do will affect this TikTok global. At least I don't see that coming. But you know, although this tool is I I think they try to structure it independently. Even the IPO, they're talking about like IPO separately, right? The TikTok Global and also ByteDance, right? But they, in terms of the management, I think they are still under one board and one management, right? So there's some link there. For example, like if the top management is occupied with all these things, they might lose focus in terms of driving their product innovation and so on. I think these things could happen. But in terms of if we're talking about like certain rules and regulation that will directly affect the business, right? I think in this very narrow view, I would say that we can view TikTok Global and ByteDance in China as two separate businesses. At least that's my take. Any other one have comment on this? Not sure if you agree with me, Daren.
I'm learning. I'm absorbing perspectives here. Thanks, Kunti.
Yeah, thanks. But at least this is something that I think will be a threat now, because there are, in terms of the trend, right? The attention span getting shorter and shorter. I mean, this short form video, I think this is definitely something that will take on disrupt Google and Facebook. At least that's my take. Okay, this one actually is showing the Amazon also coming, like I showed earlier, right? From 7.8 become 10.3% more advertising spent on Amazon. And then in terms of their, you can see the trend, right? Amazon also pick up and is expected to pick up also in the future. So definitely, I think this is the part that is, how to say, bullish on Amazon. But in terms of the overall Amazon business, I don't think this will be a huge segment. But anything gets growing, of course, it's good. Let's move on.
That Amazon Ads is one of the world's fastest growing ads business in the world. And ads, as you all know, is highly profitable. It's far more profitable than Amazon Web Services, because the cost structure of ads, there's very little incremental cost to sell an ad. So it's a very strong part of Amazon.
It's interesting, right? Because Amazon, the way they built this area, right, is making them closer to Alibaba. Because Alibaba, they actually essentially just a platform, right? And then in terms of their logistic, they kind of like so-called outsource it, right? So that's why if you look at Alibaba, you can see that their revenue is not super high, but their margin is super high because of the business model is really it's running on ads for Alibaba. So here you can see Amazon growing this business in ads, right? It's actually moving towards Alibaba. And then Alibaba now spend a lot more on their Cainiao logistic, all these things, right? It's actually moving closer to JD and Amazon. So in terms of their business model, they all like keep shifting, minor change or gradual change, right? But it's interesting that they are not become like, they're becoming more and more closer to each other. So this is something that is fun to watch. But I totally agree with what Daren said. So this is definitely something that they don't need to spend a lot, high margin business. So basically they try to come in and eat Facebook and Google lunch. So let's see how well they are doing. But they are leveraging on their strength, which is their e-commerce, all the logistics. They spend a lot of money on those, right? So making people is already on Amazon.com scoring stuff. So what they do is just selling more ads and then push certain items to the top, and they are getting good returns or good profits. Let's continue. Then we should allow some time for the Q&A also. The last one, Nvidia. So same thing. I think grow 50%. This is definitely very high growth. So, and compared to Tesla, which is just turned positive net income, right? For Nvidia, their profit margin is always quite high because like gamers, they are willing to pay for this kind of the graphic card that they sell. And then in terms of the enterprise customer, the big data, all this is also ramping up. Very strong growth in their data center business. So I think this is very, very good. Price also ran up. I think this is from Seeking Alpha. Maybe later I will share the full articles, but I think it's very interesting. So it's just a bull thesis on Nvidia. I won't go through in details. But essentially it is saying that what's happening now is, AI, right? So more and more AI. But when it comes to AI, this is similar to like Google business lah. So, like Google, they come up with very good search engine, right? And then more people do the Google search. And then the more people use the platform and the product itself become better. And there's this virtuous cycle, right? So same thing with anything related to AI or machine learning, right? So now it seems that Nvidia is leading in this space. So if their products is already the best one in the market, and then because of that, they are able to drive more users, and then they are collecting more data. And this same thing happening again in the AI world. And for Google, we are talking about specific Google search, right? But for Nvidia, this AI things, right, it will actually happen like everywhere. So that's why the opportunity, right, or the addressable market is really, really big. So I think this is definitely something that is very bullish on Nvidia. It might bring Nvidia to a couple of trillions market cap just because of all these things, right? And then in terms of their enterprise offerings, right, from software to hardware to all the frameworks, right? So for those who are not familiar with Nvidia, please watch their GTC. There's a lot of new stuff that is coming up almost like every 6 months, right? You see new announcement. And then another thing is also similar to like Apple ecosystem, So like Apple ecosystem, they have the hardware and then they have the software, and most importantly is their developers, right? So those people who develop apps. Similarly for Nvidia, same thing. It's very hard for another competitors to come up with the same thing and say they want to disrupt Nvidia. It's not that easy because maybe it's easier to come up with the hardware, but let's say when the software is there, the framework is there, the developers is already used to the platforms, right? They don't shift up easily. So I think this is something that will make the entire ecosystem very sticky. So I think this is definitely something that Nvidia is very, very good at now. You can do some search and then read some forums to see the views, the perspective from developer. So I think in terms of their offering, also getting more and more comprehensive. So I think they are doing well in all things related to AI. Then, of course, talking about this, Nvidia, of course, I think we discussed in the group also, right, regarding ARM acquisition. This one really hard to say. Some say it's very unlikely it will go through. But to me, whether it goes through or not is really not so important because if you look at this, right, there isn't that much of things that is like counting on this ARM acquisition. Even the ARM acquisition fail, right, all these things will continue. But of course, if it is successful, right, then the possibility is even greater, right? So they can tap on the ARM and do a lot more things which we discussed in the group before. So I think this is definitely something that is very, very interesting. But like I mentioned before, I also don't know. Like to me, it's close to 50-50 whether it will go through or not. But in terms of the business, I think this is not crucial. I think yeah, that's Nvidia. The last one, I pull out one that is not in the FANG, which is TSMC. Yeah, because if you look at my portfolio, I'm very bullish on TSMC. I think their strength in terms of the chip manufacturing is still like number one. Maybe Samsung is not too far behind, but they're still dominant, right, in terms of the market share. In terms of growth, right, if you look at past growth, it's like, okay, most recent quarter is like 22% growth, revenue growth, not like 50%. But, they announced that they will spend 100 billion building fabs in the next 3 years, right? So all those will translate to the growth, their revenue growth. So you see here 20%, I won't be surprised it's just going up to 30, 40, 50% kind of growth in the coming 3 to 5 years. So to me, I just want to accumulate before it show up on the financial statements. And second thing is they really need, they have the technology, right? They just scale up so that they take on more market share. So I think that's a very smart thing to do. And then in terms of their comment from the management, you can see that they also comment a lot. Right? These things, right? I think they have good communication between, let's say, like TSMC and ASML. Just because before they spend tens of billions building up fabs, right? The one thing that they are afraid the most is that, okay, after they're building up all the fabs, then suddenly actually the demand is all fake one. There's no real demands. So the fabs become idle, then that one will become a big problem. So before they spend all these things, right, they actually do a lot of research to make sure that there's demand behind that. So I think for now, the mega trends moving forward is still the 5G and all this HPC, like all the data center things, automotive industry as well, all the self-driving, networking, smartphones. So I think they really see there's legit demands also because of push from COVID also, right? I think this is definitely something that is will drive the next 5 years. So very, very bright outlook in terms of their revenue growth. In terms of their margin also, it's not that bad. It's just that if you pay attention to coming 1 year or 2 years, maybe you won't see that because building fabs is very expensive. So there will be a lot of spending. But let's say after this round of growth, right, I think their profit margin will actually go up. With a lag, it doesn't go up immediately. It might lag by a couple of years. But for me, I'm looking ahead like 5-10 years, right? So it's really good to own as long as they are able to maintain their leading position. Then, I think if you look at the outlook in terms of their 3nm chip, right, it will come out late this year. So you just need to wait like 12 months, right? So all the M3, the new iPhones, they will be using the latest chip. So no, I think this is like some delay is possible. It's just that it's not something that is. I mean, even with some delay, I don't think some other competitors will catch up. And then I think that the other things that I'll watch out is that, they are building fabs in US, and then they're talking about building fabs in Germany. Germany one is still under discussion, and then Japan one also coming. So they just want to diversify away from having all their fabs in Taiwan because of all this geopolitical risk, right? But I think one thing that I'm a bit worried is that whether they're building fabs in other countries, whether in terms of the cost, right, they are able to maintain the cost advantage. Because right now, their fabs running in Taiwan, right, even if Intel is able to catch up in terms of their performance, they won't be able to catch up in terms of the cost, right? Because running fabs in Taiwan is still very cheap relative to US and other places. So, but let's say if they build all these fabs outside of Taiwan, I don't know whether it will have an impact to the cost structure. So this is definitely something to watch out. But we probably need to wait like 1 or 2 years to have any numbers to analyze. So also very, very hard. I think, this is Japan one, and then this is Germany one. I think that's all about the presentations. Anyone have anything to add or any questions that you want to ask related to this?
What's your take on AMD right now?
Sorry, AMD, right? Not AMC, right?
Yeah, AMD, not the meme stock.
Yeah, I think AMD is a solid pick if you are bullish on semiconductors. So in terms of the CPU business, they are still like having a very attractive products offering, and even Intel, I don't think they can catch up to AMD. AMD is really good at leveraging on all the good manufacturing from both TSMC and also Samsung. I think they work with both. So sometimes they shift their product. But I think in terms of their good product, in terms of data center business, they are taking market share from Intel. I think it is a solid pick. It's just that for me, I already have a sizable allocation in TSMC and also Nvidia. So I mean, for me, I just don't want to have the entire portfolio into semiconductors. If that's the case, I will just buy a semiconductor ETF. So I'm more bullish on these two, TSMC and Nvidia. That's why I'm not buying AMD. But in terms of the companies, I'm very bullish on. As in, I think they will be doing well. But when I say I'm bullish on TSMC, it's not so much on whether I think that they will actually price rally a lot. I buy TSMC because I think it is the safest one, regardless of who's doing right. I mean, whether you buy which chip, right, which GPU, right, you still come back to TSMC because they have a large market share in terms of the semiconductor manufacturing. So, all these fabless companies, they are like in war with each others, right? But TSMC is like the one that's supplying the weapon. So regardless of who wins the war, TSMC still win, So they are definitely not the one that will, not the one that will take the most profits, but they are the one that is safest. So at least that's my take on TSMC. All right. Any other questions? If not, we quickly move to the Q&A. I think this one, let's take this Q&A as a roundtable discussion rather than me talking. Yeah. Okay, let's start from the first one. 2022 predictions from H. Big tech outperform again. Net market cap weighted returns more than S&P. Which one out of the Microsoft, Apple, Amazon, Google, Facebook highest return for 2022? H, you want to say something?
Actually, I got no opinion about this. I just put in the question for possible discussion.
Yeah, then I'll go first now. I think my position is still the same compared to, let's say, over the past year. I think all these big tech, right, like Microsoft, Apple, they will outperform S&P 500. So that's my take because of the one thing is because their business is still riding on this digital trend because of COVID. All these things is still running. That's one. Second thing is that I look at the other sectors within S&P 500s, right? I think they are a bit overstretched in terms of their valuation. And actually, there isn't anything that is like a lot of tailwinds. For example, you look at banks, still banks, right? I mean, not much change. Maybe in energy companies, I believe they might outperform S&P 500 because of the underinvestment 2 years back or in the past 2 to 3 years, right? And all this ESG stuff actually make investor stop from investing in oil exploration. So I think this will actually push up the oil price. So maybe energy business might outperform, but the rest, right? I mean, as in companies that is not in energy and not in tech, right? I find it very hard to see anything that actually help them to outperform average. At least that's my take. So what about others?
I'm wondering what about luxury? Like Hermes stock went up 70% last year. And normally in times like this, the rates get richer. So luxury stocks tend to do well. What do the rest of you think?
I think from what I've witnessed last week or 2 weeks ago, I went to Mid Valley, a shopping mall here, the luxury shopping mall in KL, right? The crowds are mostly at the luxury boutiques. So I was very surprised to see that, especially with, I mean, the rich people are not really getting affected. But I don't know, I can't speak much on what is the return or performance for this 2022. But if talking about like historical wise, right, if you are talking about interest rates rising, the financial stocks may perform financial stocks.
Yeah, I think that's we also discussed this, I think, in maybe a couple of weeks ago, right? Interest rate go up, financial stocks will benefit because of the spread that they are charging. That could be true. Yeah, I don't know. But let's say come back to this, I will say, yeah, maybe the luxury companies, financials, energy. I think this might be the one that could outperform now. I don't know. Okay. I don't have other views on this. It's a bit broad now. So anyone want to share anything, your view? I think this can spend some time on this. If no view, then we continue with the second question. Or you guys actually want to like do some questionnaire? We can actually design something, like everyone put your bet and then maybe next year we can review, see whose prediction is the most accurate one. We can do something like that. Just do a poll. Let's think of something. Let's move on to the second one. I'm student with $1,000. What game plan do you recommend? Daren, Kelvin, you want to go first? Or Eddie. Usually Eddie also have a interesting take on such question. This is not really investing question, I think. Just that because he's talking about game plan, right? So I think this is broader.
It's very hard to say. 1,000. I mean, I guess you can just do like, ETF or something into the index or something. Yeah, I mean, I don't want to belittle it, but it's I guess you have to start from somewhere lah. So I mean, I would probably just put it into an index ETF and just let it roll.
I think if I were a student with just $1,000, and it depends also on how do you see this $1,000? If you want to take it as a learning as a learning tool, right? I would say, like break it down into like 4 or 3 tranches and try to go into picking 3 or 4 stocks or companies which you think you can understand, right? And then use that as a learning experience. Use this $1,000 to put some skin in the game and take it as a learning process. Don't take it as like this $1,000 will bring you 2,000 next year or in 2022, but rather to motivate you to at least learn these 3 or 4 businesses and use it then after the year, right? You review what do you think you did well, what do you think you did not see or what you predicted, evaluate it a bit and then use this as a lessons learned so that in 2023 when you have more money, right, you can be more confident in investing in other asset classes or in other businesses. I think that should be what you should do if you have this $1,000, in my opinion. Rather than, I think, not to say Eddie is wrong, but rather than just putting in the index, I mean, if the index grows by 10%, all right, what do you learn, right? You don't really learn much. Okay, so I think putting it into like 3 or 4 stocks should be the game plan.
I agree. Invest in equities because it's the most liquid investment. Then take some time to discover. Everyone takes some time to learn that. Maybe for some people, they love real estate. Others, they like collecting Hermes handbags or Rolex watches or rare whiskey or crypto. But equities are the most liquid and you can spend a very small amount just to get into it, whether it's ETF or buying something super safe like a Microsoft or Apple as well.
Yeah, I think I definitely agree. I would look at this 1,000, these questions, right? On 1,000, what's the game plan? I would say, don't look at it in terms of the return or the monetary returns. Try to look at it from like, how can you maximize the learning out of this $1,000? So it might not even an investment. It might be something that you spend on. For example, I think I said it quite often is that you can take the money, buy a Kindle, and then once you have a Kindle, right, then you can have a lot of like books, right? So if you don't know what book to read, you can ask in the group. There will be a lot of recommendations. Just read as much as you can. And Kindle is always good, better compared to like phone or iPad, because with a phone and iPad, you have a lot of distraction. But if you have a Kindle, just disable you won't browse the internet with the Kindles, right? So you can stay focused on the reading. Just read as much as you can, especially as a student, right? So it's the very different reading all these books that is not textbook, So you're actually learning from the author himself. Like you get a perspective of someone that you might not know, and that someone could be some great thinker in the past 100 years, right? Could be anyone. Just pick up some good books and then just read as much as you can. So you probably need to spend like $100 just to get a Kindle, right? Then you can maximize the learning. Then if you say about investment, I would say, on the learnings, let's say if you just put like $100 or $200 in anything, right? Let's say you say, I want to try day trading. I want to see whether it works for me or not. You can also do that. Spend a couple of $100, do day trading. At least, let's say after you do this for like 6 months or 1 year, at least you will have an answer for yourself, right? Whether day trading is something for you or not. You see? So, because with 1,000, you can lose it all. After you graduate, you get the first job. Let's say your salary is, I don't know, maybe 2,000 or 3,000, right? You can easily earn back 1,000. It's a very small amount. But if with that small amount, you can already like try up something that, it will work out or it doesn't work out, right? Then moving forward, you don't have to spend the energy already. For example, if you do day trading for 6 months, you don't see the money, right? Means that this thing is not for you. So you don't have to continue to do that anymore. I think this is the phase where you can do a bit more experiment, including like option trading, day trading, all the crazy stuff, right? You want to go into crypto also can. Just be a bit more crazy about it. Because what I try to say is that you don't want to be very conservative when you have 1,000. And then after, let's say 5 years down the road, when you have 50,000, and you see your neighbors become rich by trading some crazy bubbles at that time, right? And then you take the 50,000 or 100,000 and pour inside. That's a very bad strategy. I think if you want to be more more aggressive and want to try something crazy, try it when you have like 1,000. Because let's say if you have 1,000 and the 1,000 is all you have, right? And you throw into crypto or all these crazy things, right? It doesn't feel 1,000 to you, It feels like this is all the money that you have. You still feel the thrill, Because once you have 100,000, you cannot run this experiment already. Because if you have 100,000, you put in 1,000, it doesn't give you the same level of the thrill. The experience is very different. So these are the things that you can try out. Be more crazy about it, but not be crazy for the sake of crazy. So you want to remind yourself that this is really for experiment, for learning, and just to try out as many things as possible so that you know what works and what doesn't work. So at least that's my take on this. But when it comes to, let's say, like some solid advice, right? I will agree with Eddie and also with Kelvin, like you might want to do something that is less crazy, less experimental. Because once you are, let's say, 30 years old and you are still doing all these crazy things, right? I think it's a bit too late now, or you are wasting a lot of time already, right? So, but when you're a student, it's easier to do this kind of thing because you are like a sponge, right? You can absorb much better compared to those who are like 30 or 40 years old. So be more curious, stay curious, stay hungry.
Also, another advice I would give as a student, I'm not sure who posted this question, but what kind of discipline the person is studying in the school. But I would try to take finance related courses like investments analysis, etc. If those opportunities exist, at least you still have to fulfill your graduation criteria, right? You might as well use the time to earn academic credits on investments or finance kind of electives.
Yeah, totally agree. I think you can see, right? I mean, whoever asked this question, you can see, I think most of us here, our suggestion is more towards like helping, like encourage you to learn rather than take this 1,000 and make it become 10,000 and 100,000. Because the real monies, right, it will come after you start working and then have some active income, you have saving. That's where the real monies come in. It's not like you can take this 1,000 and gamble your way up to like become millionaires, right? It's very, very, like probability speaking, doesn't work that way. It's very hard. Okay. Let's move on to the next one. Planning to cut loss on my Alibaba 10,000s. Which stocks should I all in to recover my loss from Alibaba, that piece of shit? I read this line. I know this is coming from the same friend. If you, I think I'll suggest that you private message me. I just want to know who is asking these questions. If you don't want to like share your identity in the group, right? Just PM me. I'm really curious, like your situations, because 10,000 loss is not a small amount, and you keep on posting this question for, I think this is maybe the third time you're posting. I don't know, like in terms of your emotion or your psychology, right? I don't know what's going on here, whether you are struggling mentally or psychologically because of this position. I don't know. I think it's very hard for us to give a good advice without knowing your situation. So you might want to share a bit more on why you are like kind of getting a lot of negative emotions from Alibaba. So that's my questions. And then back to, I think Alibaba we discussed a lot already. I won't go into the details. Anyone else want to comment on this?
Boon here. Yeah, generally this guy, I don't know how many percent of that 10K is to the whole sum of money invested. But you can have a wonderful experience if you lose 50% and you still hold on to that stock, because not many people can actually stay invested. But the moment you start to curse about a certain idea and all that, you must really think of it as a business and think whether it's actually worth that much. I think Alibaba is worth about fair value, and that's why I'm still holding, even though I like maybe 15% down last week, 20% down. During COVID, some of my stocks, which are pretty substantial to my portfolio size, went down 50%, 40%. I have friends who lost like 50, 40% paper profits, even when there was no COVID, on certain ideas that are not affected by COVID. So this kind of fortitude, you must have it when you're investing in the stock market. That's all I have to say about this.
Yeah, thanks a lot for the comment, Boon Song. Yeah, I think definitely true. Don't curse stocks like this. It's not the problem is not with Alibaba. The problem is with your mindset when you are doing this. You know, it's not healthy for your portfolio and for yourself to curse like this. You know, I think Alibaba as a stock, right? The stock don't know that you own it, so they don't really care you curse the stocks. You know, it's just the companies. You know, so but don't do that to yourself. I think for your benefit, be objective about it, and then try to assess the situation, look at the fair value, look at the business, have some outlook whether you think the business is doing well or not, and then do position sizing. And it's not binary decisions, right? It's not like you either have to all in Alibaba or all in another stock. Investment is not like that. So you can always diversify a bit. Or even if you want to sell, you can also sell like 10%, 30%, 50%, 70%, any number, right? So don't make it become binary, because you know when things become binary, you are less objective about it. So just all this is probability. And also if you really struggle with this, right, you just want to get rid, right? You also need to like just close your eye and just imagine what if Alibaba just double within like 6 months. Right? Are you okay with that? Yeah. So this is something to consider. And you also need to imagine the same, like you need to close eye and imagine that Alibaba just dropped another 50%. What will you feel about it? How do you feel about your position? Because you need to internalize it with yourself to make sure that either it goes up or down. You should be ease of the situation, of the outcome. Don't just like treating this like a gambling, right? You bet big, you bet on a certain outcome that it might turn out to be right, then only you can be happy. If not, you struggle. It's not like that, you know. So I think that investment, it should be something that's, regardless of the outcome, you should be happy about it. for example, like Amazon doesn't grow the entire 2021. I have a good allocations. I'm not feeling down at all. To me, I just think that it's become more attractive to accumulate, right? Because if it has to go up by 20% like every other stocks, then I think the entire investment period will be so unhappy, So I think this is not good now. Okay, let's move on. Anyone want to say something? Yeah.
He actually posted a follow-up. I don't know whether that's a real person, but he say my portfolio is only 25k. I lost 10k on Baba. My car is forfeited.
Okay.
I'm not
I
sure.
hope this is joking. Okay. Yeah. All right. Let's move on. What's your outlook on 2022 for USA and China economy? Will there be more upside for China to grow since it dropped about 50% last year, 2021? My expectation on this is I think it will be more or less similar to 2021, meaning that, just extrapolate. That's my take. But I don't have a great insight on this area. To me, it's just like wild guess. Anyone else want to give your thought?
Personally, I think it will be no surprise if China would outdo the US market by a tremendous amount of percentage this year, because really the dogs of yesterday are the heroes of today. So I always think that yesterday's losers are always today's winners. And certain stocks are really very cheap in China. Yeah.
Yep. Just need to be patient. You don't say, okay, it dropped 50%, it must go up over the next 3 months. I think that's not it doesn't work like that. But if you think that it dropped to a level that is very attractive in terms of valuation, then in terms of margin of safety, you don't need to worry much already, right? Because the business is still there, price is cheap, so it will tend to be. Probability speaking, you have a good outcome. It's just that don't say it must go up. Yeah, I think we need to accept the probability. All right, let's move on to the next one. Stock will move sideways from 2022. Any strategy for US stock picking to share? Anyone want to go first? If no, I'll go first. I think it definitely won't move. How to say sideways? What does it mean, right? Sideways, it means that let's say by end of 2022 is about the same level as of early 2022, right? But in terms of the volatility, it could still go up, down, or down, up, right? So I think that's the definition of sideways. I think it could go sideways, but I doubt for companies that is running well. For example, the stocks that we just talked about, right? For example, like Nvidia, you look at their business, the data center business, all these things are running well. You look at Tesla, I think all these companies that is doing well will just continue to outperform. At least that's my guess. Because, one thing I don't think is mentioned enough is this momentum, because stocks usually they have this momentum going on. Once it's going up, right? For those who already own the stocks, they already feel like validated. And now I think they are used to like, okay, I turned out to be right and I will just hold on to my stocks. And for others, they will FOMO in, right? So that's why, stocks that has went up, they tend to continue to go up, right? So I think this is why I think those that is doing well, they will continue to do well. At least we're talking about like 6 months, 12 months down the road now. But if you want to take that as a projection for longer, it doesn't work. Momentum usually is like between 6 months to 18 months. So that's why I think for those that is doing well, it will continue to do well. Any strategy for US stock picking? I have shared my view. I'll see others if anyone want to share anything. No, let's move on to the next one. Many are predicting sideways for major indexes. Anyone predicting 0.7 to 1.3 again? 0.7 to 1.3, I guess this is talking about the global financial crisis and then the European crisis, which is between 2011 and 2012, right? I don't think so. I think this is not going to happen because I just don't think so. It could have another, let's say 2018, where the entire, like all the broad major index drop by, let's say 20%. It could happen, but not the global financial crisis where they dropped by like 40%. So 20% it will come for sure. Just not sure whether it's 2022 or not. At least that's my expectation. Anyone want to share? But this is macro again. And yeah, we can always talk about this if you guys want to know. Anyone want to share anything on this?
I just want to add on. I think there's a big difference between sideways trading and going up and down. Because 07 to 13, it went down like 30%, then went back up 30%. I think that's quite a big difference from sideways trading. I think just worth noting. Because a lot of people, like, I think especially traders say, you can make money in the bull market, you can make money in the bear market. So I think there's a distinction, I think worth noting.
Yeah, I think it depends on the sideway, the volatility, right? If it become like plus 10, minus 10, plus 10, minus 10, or plus 5, minus 5, that one is sideway. But if you have like 20%, definitely that is crash, right? So we won't call it sideway. It depends on the volatility. But on this, I don't know, like this one, I think whoever asking this question, right, I think I would suggest that you go and pick up some book later. Maybe I'll recommend some. You can read about what's happening between 08 to just 08 and 09, like the subprime mortgage crisis, just to learn about the history back then, like what caused the global financial crisis, right? I think you will have a better appreciation on like what's actually happening. Because if you just look at the index, like it dropped 40%, right? It's just a number, it become like a number. You can't make sense of the drop, but you need to look at what's happening back then in order to have a picture. Then you can see whether we are seeing similar things happening or not. Okay, I think definitely this is talking about like stock market, but let's say a huge crash, right? It could happen in certain pockets. For example, like people talk about this crypto, right? You see all even the small shitcoin, all this has exploding up, have multiple billions of market cap, right? So all this, it could drop by 90%. I mean, that's a huge crash, right? But that's crypto. So it really depends on which market that you're looking. When I look at this, I tend to see it like just a broad market, like S&P 500. You want S&P 500 to drop by, let's say, 40, 50%. I just don't think it will happen within 12 months period. I don't expect that. Doesn't mean that I can guarantee it won't happen. Okay, let's move on. When do we enter or exit a stock position? Anyone want to comment? Share your strategy when there's a timing element here as well? If not, I'll share mine first. I usually enter, let's say if I have under allocation to a certain stock. So if I think I am under allocated, for example, now Apple, Microsoft, all this rally already, Amazon didn't rally. So, but I still want a larger allocations, right? Then I will just buy. I'm not doing all this technical analysis, stuff like that. I don't look at that. I just look at my position sizing. So that's one. And about the exit one, if I'm bearish, I just exit. Or if I think I am less excited on the stocks, nothing to look forward to, I also exit. Or sometimes like I just sold like Roku and Tencent Music Entertainment, right? To me, I just like do some review, take a look, see anything that I'm looking forward to. And then I just think that, okay, I don't want to follow that stocks anymore. So that's a small position for me anyway. So I just exit now. So it's not like I'm married to the stock, So I think I nothing to look forward. And I don't think it's a strong conviction names. I can just exit easily, not attached. So that's me. Anyone else want to share like what's your strategy? Do you like pair technical analysis with fundamental analysis, anything like that? Please unmute and share.
I'm also roughly the same that what Boon is doing. But what I differ a bit is that I I tend to only exit if I need the money. So especially when there are like big purchases or something that I have already a goal that I've achieved, so I will exit. But if you're talking about like opportunity costs, right, I don't really do that, but I do trim sometimes. Like for example, I used to hold quite a substantial amount of money in Apple, and then when the opportunity arises, like when the Tesla crashed in March or April 2020, and then it dipped also in 2021, right? So I sold off my Apple to buy Tesla. So I don't really sell just for the sake of selling, because cash usually yields very low in this kind of environment nowadays. So unless I really need the money, then I'll sell. And everyone's financial position would be definitely different. So that's why you must have like conviction. Like what sometimes people say, very cliche, conviction, but it's very hard to quantify that. But if like for me, talking on more recent terms, right, because I was very bullish on Tesla, although I have Apple, but I did not sell Apple until I know that, okay, the Tesla's value cannot be this low. It should be reflecting a higher value. Then I sell off Apple and buy Tesla. Although Apple also might have dipped at the time, but I just feel that there's just an element of the opportunity cost lah. Don't hold it too long, and because I see the growth in the Tesla is more promising. But of course, I did not sell everything, right? So I mean, the like what Boon also said, you read on some books or literature on like portfolio allocation, and also you have to reflect on your own financial needs and your own feelings. Like some people can take more risk, some people cannot. Some people have families to feed. Some wants to only aim for growth. Some people want to aim for capital preservation. So there's no one number fits all, right? So you have to read more and find out what suits you.
Thanks a lot, Kelvin. Anyone else want to share? If not, we go to the next one. Okay, let's move on to the next one. Many predict sideway for major indexes. For someone new to investing with 100K cash, any recommendations how to overcome mental barrier of lump sum 100K? And then there's a continued here. My goal is not ambitious, just wish to beat inflation in the long term so that the real value of 100K does not erode over time. I think, is there a continued? No more. But I think the first question I would interested to find out is that, you have 100K here. Are you still having active income at the same time? And then, are you still having saving? Because if you are still saving, right, like monthly, still saving, I think you can allocate more to the stocks immediately. But let's say if you don't have saving anymore, for example, like close to retirement, and then what you have is only 100K, right? Then it is actually harder to like just lump sum, because once you lump sum 100K and then market just drop by 5%, you would every day just look at the 5,000 loss and struggle with that 5K. Emotionally speaking, it's quite tough. But for someone who is young, who is still like working, earnings, have saving, actually you want to straight away lump sum 100K also is not a big problem, right? Because you need to factor in the present value of your active income as well, or your active saving, right? So it really depends on each individual. By just looking at this here, right, I think it's really hard to give a good suggestion. But of course, it's like zero, how to say, it's not binary, right? Like you have 100K, probably this 100K is sitting as cash. Between 0 and 100K, you can just do a percentage, right? And then, for example, like you start with, put in just lump sum, not lump sum, you just put in like 20K first. And then just monitor the market volatility and see whether you are comfortable with a 20K allocation. And if you think that you can allocate more, then you can add another 10K and just observe your emotions, whether you can take the volatility or not. So I think this is something to to consider. But I think still back to the overall, your own financial planning, for example, your obligations, your other saving, is your house paid out or not? A lot of factors to consider. Like, just looking at these two lines, it's very hard to say, okay, there's a good advice. My only advice is try it. You can keep on adjusting in the future. Anyone else want to share, or you can unmute if you are here, just to share a bit more on your situation?
If you are really new to investing and if your goal is just to beat inflation, there are actually products outside that can actually give you participation in growth while also being inflation hedged. So you just need to find the correct funds or the ETF that gives you that product lah. So it's not difficult, right? But of course, there's a price to everything, right? So you definitely will not be fully participated in all the upside, but you maybe then have the luxury of the not losing your value to inflation now. So there's actually a lot of products outside. You just need to find it out now. But that one you won't learn much lah, because you are just preserving that value of 100K, right? You are letting your money being managed by someone else. So if you think if you are really honest with yourself, it's just you want to beat inflation, right? Then there are products for you already. But if what Bunti said, right, if you want to learn, if you want to, like depend on your financial situation, if this 100K is all you have, or is this already like an investable sum, then you can pick stocks or allocate like a different positions, and in different businesses, different classes, and also learn at the same time now.
Yeah, like all these financial advice, right? We tend to say, okay, this is not financial advice. This is just sharing for entertainment, for sharing, basically. We can say everything we want from our own perspective, right? Like I come from my perspective, Kelvin, you come from your perspective. We don't know like who's the person asking, and we don't know what's the profile like, right? So I think either you can share a bit more about your situation, and then we can chat about it. We can discuss in more details. If not, then we need to just keep it at the surface and say things that is more surface level things, because I cannot really say, oh, you should all in, because Vanguard, there's this analysis, they say lump sum will beat this DCA 70% of the time, for example, right? It doesn't work like that now, because your largest enemy in this entire journey is yourself. Because if you get in 100K, then suddenly market drop by 12% and you panic, you sold, okay, then gone already, become permanent loss, right? Whereas if you keep holding on, maybe you can still get your money back, right? So it really depends on the situation, and have a plan basically that suit your own profile. Okay, let's move on. Question related to brokerage. This is interesting. Duration of IBKR withdrawal. Heard Syfe trade coming up this month, but do not provide OTC market trading. Have tried using IBKR, but hard to understand. I think not many using IBKR here. I don't know about you all, but I myself using IBKR, but I need to. I do agree with you. IBKR is not the most user friendly. So sometimes take some use to it, not immediately. I also still struggle after using it for like maybe even 6 months, right? But when it comes to withdrawal, I can tell you I don't know how to withdraw. Even now, I don't know. I need to Google to check if I need to withdraw my money. But I think that's the purpose, right? I only put the money that I don't need, let's say in the next 3 or 5 years. So that's why I will just leave it there. If I don't withdraw over the next 10 years, even better. So this is the portfolio building, right? Just keep on add on to it. I don't plan to withdraw. But if you want to know all this, you just do a Google search.
Bunti, maybe there's a feature. It's so hard to withdraw that makes you a long-term investor.
Yeah, that's the trick, right? But need to
to know the duration, if it's to a Singapore account, it's actually quite fast. If I'm not mistaken, it's one business day only.
Yeah. I don't know. As in, I mean, who's asking this question, right? If you, yeah, I think Kelvin answer it's 1 day. But I think that's enough on IBKR. Let's continue. Stripe IPO. David Friedberg suggested possible Stripe IPO in 2022. What market cap will buy in at? Yeah, anyone following this? Because you want to share something on Stripe, or Ash, you can also share why are you interested with this?
No, this one is just because I was listening to the All In podcast. Then they talk about possible IPO. Then just wondering what sort of market cap you're considering to buy in at, or what are the comparables? Because anyway, we also don't really know what is the exact financials at this point of time.
Yeah, I do agree. No financial. Even if there's financial at IPO, also, usually once it start trading, also can get a bit crazy. And these companies I know is very hot. So, as in, I would expect that once it IPO, right, it could go up very fast. Nothing to do with the financials, right? It's just because of the companies. I don't know why they're all saying it's that good. I haven't read into the details, but I'll put them same category as, let's say, those Rivian, like companies that might be a good companies, but I don't know, the price is very, you shouldn't expect to get it at a attractive valuation. So depends, doesn't suit all the peoples. I will probably just stay away once the IPO.
Besides the financials, if I'm talking about the product side, I used Stripe before to deploy some businesses So if from a Malaysia perspective, right, it's one of the easiest way to implement international credit card processing, and I think maybe that's because Malaysia's payment processors are not so advanced, because we need to register, and then we need to wait for approvals. We need to have it integrate to our, let's say you're using WordPress, or you're using your own website, right? So that's the I think that's what Stripe can provide for those markets where their incumbents are lacking in terms of integration. I've also heard from friends that sell courses online. They also choose to use Stripe because it's really very easy. A click of the button and then you are up. But you can only accept US dollars. So I think that's their business. But why they want to IPO and what kind of potential they have, that one I no comment. Because I don't know. I have not read into it. So that one, if you are interested, then you have to dig deeper.
Kelvin, who's their main competitors in this area? If let's say those who want to do similar thing don't want to go through Stripe, which service provider will they use?
There is PayPal. PayPal's subsidiary is Braintree. Braintree also doing something like this, but I have very bad experience with Braintree because they have a lot of hidden charges, although they say they are transparent. Then there's another one which is Square. Square also something like that. And then there is one more is Shift4. It's also a payment processor. Shift4, if you have not heard of it before, it's the guy who went to space with SpaceX. The four people, right? The CEO was one of it. So that one I'm a bit more well versed because I read through it before. They are more top to bottom integration. So they also provide software solutions for inventory, if you want to run a business, right? So you can use the Shift4 platform. So you can top to bottom from your accounts, your inventory, your payment, your point of sale, everything they have. But I don't know about Stripe, so I can't say that. But if from a payment processor competition, those are what I have mentioned.
And the Stripe confirm is the best one, right? So
I don't know about what is the best, but at least from integration. So if you are just wanting to quickly sell your product or sell your course online, right? Stripe offers quite good and internationally acceptable. The Braintree also, that quite good, but Braintree, because of my personal bad experience, I wouldn't use them again. And for the Shift 4, that one is more US centric still, but they are growing substantially internationally soon.
okay, thanks a lot. Let's wait for the IPO and wait for the more details that come out. I think definitely interesting. I don't know, maybe I say I won't buy in IPO, right? Let's see. Maybe like Roblox also buy like 5 shares and just keep just to monitor. I don't know. All right, let's move on. We are close to 2 hours already. Let's jump in. Couple more questions here. Top stock pick for 2022. Anyone want to go?
If this is quick fire question, right? No explanation, then Tesla.
Quick fire. Any other companies?
Tesla.
Anyone else? Just shout the name. No more already. Only Tesla. All right. Okay. Then I think I'll pass lah. You guys know my portfolio. Doesn't make sense, right? I say my top pick is Roblox, and then you look at my position sizing so small. Doesn't make sense, right? So you can, for those, for example, like you guys know Kelvin's portfolio. I think you guys also know Daren's portfolio, right? So you know we are all sharing our portfolio. You know our top pick. But if you have any other pick, you can just share, and then we can discuss the company in details. Big tech saturated, Nvidia 125%, Microsoft 50, Tesla 50, and so on. Should I seek for gains in other sectors? Anyone want to share your view? I think I shared my view for my entire sharing already, right? So I'm still owning these companies now. So that's why I'm not seek for gains in other sectors. I'm still bullish on these names. But others might have a different view. You want to share?
I'm also very big tech focused, but I'm actually looking into more the supply stream side of things, especially in the battery side of things. But I do not have any or any concrete opinions yet, as I'm still looking into it.
Actually, talking about suppliers, right? I definitely battery. I try to look at the one cater right in China companies. But I think it's very hard to buy because it is not listed in Hong Kong Exchange. But definitely interesting. I think there's this video on Cater, CATL. I think that's quite interesting. And then the other one,
there are 2 ETFs that you can actually look into. One is the Global X Lithium ETF, and another one is, I think, Amplify ETF or something like that. So both are invested in the batteries and the lithium supply. So you can look into it. They have Kettle, they have Amperex, they have, I think, the large holdings, all those China suppliers. So you can look into it. And also the funny thing is they also have Tesla as their top 1 or top 2. So I'm also looking into it. But this is not a recommendation because I have not really understood all their holdings yet. But I'm interested to look into the supply side, and I think that would be a good place to start.
Yeah. Another one is, I think interesting, is the lens makers. Because like Tesla, how many cameras? 8 cameras, right? Yeah. So 8 cameras.
Yes,
8 cameras. You think of like how many other EV makers? Any EV makers that will have autonomous driving will have all these cameras, right? So I think lens plus all the other IoT stuff, drones, let's say. I mean, there's a lot of applications. I think all this on the supplier side also quite interesting, but need to do more due diligence. There's one company that's listed on Hong Kong one on the lens. Also still reading. Anyone else want to have any comment on this question? Gains in other sectors, but it also depends on what sectors that you're talking about, right? All these are tech, yes. When you say other sectors, do you mean the other names or just other sectors? Because just now we briefly mentioned about energy, about like luxury. I'm not sure if there's anyone interesting.
So it's very important to use the first principles thinking rather than analogy, right? Like, oh, it's been growing so much already the past few years. How can it continue to grow? I think what's very important to understand the fundamental economics of the company or the industry. Like, what are they doing? Like Apple's been growing 20, 30, 40% for decades. So just because something is growing a lot, like Nvidia is going up 125, doesn't mean it's going to stop growing 125 in the next 5 years as well. The more important question to ask is, what has changed about the fundamentals? And make your own decision from there. So it shouldn't just be about the stock price, but what you believe in it as well, especially for all of us here who are long-term investors. We shouldn't be swinging our investments every 1 or 2 years or so. That's my take here.
Yep, 100% agree. Follow the companies. Look at what they are into, right? So, yeah, don't just say after 50% grow, it won't grow again. Already 10x in the past 2 years. Right. Okay, let's move on. Thought on Palantir. I think it's the same person again, right? But we don't know. Let me check. It's just like I saw. Is Kelvin here? Kelvin. I think I saw him just now in the chat. But I think this one definitely we need to have someone who is well versed on Palantir. Anyone else? Or you are? I think Geeks Man also, he said he invested, right? But he's not here. Maybe later we schedule with those who's more like bullish on Palantir, then we can talk more into it. I studied before, I looked at it before, but didn't follow as much, so no comment from me. Anyone else want to say something on Palantir? If not, we move on. Okay, no. Next one. What do you think of the US interest rate hike next year? More expensive to borrow money and valuation drop due to increase in risk-free rate. I shared this before. Maybe Mr. Fu here haven't joined that time. I think this one is not really like secret, right? They communicate it very well. I mean, Fed communicate it very well. The QE will run until March. After that, expect 1 to 3 rate hike in 2022. So interest rate will rise for sure. So if you have mortgage, please pay attention. If you want to do refinancing, you might want to pick the fixed interest rate rather than the floating one. That's something that will have quite a significant impact. I think that's one. And then in terms of valuation, I think this is not so straightforward. Because if you go back to 2018, where the interest rate just go up a lot, and then companies like Apple drop by, I think 20%, right? That is also because they tighten more than, they tighten a lot. It's not just like 1 or 2 hike, It's already to the extent that the 10-year rate hit, I think 3%. So it's really a lot, So I don't think they are going to pull off the same thing again. And the next interest rate hike is always depending on one, the inflation number, and second is all the economic numbers. Now, for example, like GDP growth, corporate earnings, all these things. If they know that keep on hiking rates will hit the valuation and hit the profitability of these companies, right? Stock market will tank. This is definitely not something that the Fed plan to do. They try to take care of the stock market as well. So, but they didn't say that, but we know that's one of their KPI. If not, they won't go and save the market when the market crash, right? So I just want to say it's not so straightforward that whether we will see a correction in this year or the next year. We don't know. But just that we need to take into account that interest rate goes up, and then, the liquidity, right? The sloshing of liquidity here and there causing market just go crazy rally in the past 2 years, right? These things might not continue. So don't go and just anyhow whack companies and thought that all companies will just stonks. So I think that one will stop. But for solid companies, I think, 10% correction happen all the time. That one, I think it happens very frequently. But let's say the one that you are expecting 20, 30% drop, I think, I'm not so sure whether it will happen. So that's comment from me. Anyone want to add?
If you can know when Nancy Pelosi sells her call options or when the expiry date is, then you will not worry about this anymore.
Yeah, there's a leap, right? There's a 1 year around that, right?
Yeah, I think she bought like Disney and Google, I think something like that, right? So
and Salesforce.
Yeah, but then she will only declare I think they have 7 days after the fact that she sells. So if only you know when she sells, right, then you won't worry about this.
Yeah. Okay, let's move on. Are there any free resources to learn options trading? What are the examples of stocks to option trading with? Must I have minimum capital to do options? I think this one, just YouTube, there's plenty of resources. I think you can start from the 3-hour options video. I think that is a good place to start. And I would say that option trading, there are two things here with this option trading. One thing is the trading part, which you are doing buy sell, right? You are buying options on specific companies. So without options, you also need to know how to trade, right? If you really want to learn about trading. And then second thing is, with regards to options, you need to know the mechanics, what is strike price, how will the payoff looks like if you change the strike price, what is the time to maturity, all these things. There's a lot of technicalities within these options. So you might want to learn that as well. So two separate things. Because for example, I know all these mechanics, like strike price, maturity, all these things, but I'm bad with trading. I don't trade. I invest for the long term, right? So for me, if I go into option trading in and out, right, I think I will lose money because I don't know how to read chart, all these things, right? That's why there are two parts of this. So you might want to spend some quality time with both. Like if you want to do trading, you need to know how to anticipate the stock movement, whether it's up or down. Second thing is the options details, so you also need to know. But I think YouTube is a good place to learn. There are plenty of quality resources, and they are free, so you don't have to pay. And then, of course, you can do some Google search on this and just read about it. There are plenty of resources. There even textbook you can read, and you can ask questions, chat with your friends, see who's doing that, and then maybe learn a bit. That's all advice from me. Anyone else want to comment on this? Second thing is on the capital requirement. You want to learn on the margin, how does it work, how the calculations. Because in order for you, let's say if you're selling options, right, you need to know how much capital to put in, and then to allow you to sell options. So learn the mechanics. Take some time if you are into this. But if you are not into this, then just own the stock. No need to do options trading. Just invest for the long term, which this group is all about. Okay. Next one, is Apple overvalued? Short answer from me, no. Anyone else? I can answer for Daren as well. Also no. Anyone else want to tune in?
I think one thing I'll add here is look at the investment track records of people who've been saying Apple's been overvalued for the past 3 decades.
Yes. Yeah, I think they still have a lot of cash flow. That's what I would say. I don't think it's overvalued. And one thing I would say, people always say, Apple 3 trillions. You want Apple 10x? Can it be 30 trillions market cap? Cannot be, right? So how to 10x, right? I think this is one of the common comment with regards to Apple. But if you look at the shares outstanding, right, and they are paying dividends and then they do share buyback. for example, right, if Apple still end up with 3 trillion 10 years later, but because of all the share buyback, they actually reduce their outstanding shares by 90%, right? You still get a 10x because your percentage of ownership actually increase with all this share buyback, you know. So I would say that Apple don't really need to increase their market cap. Of course that will help. But over time, this share buyback will have a sizable impact. Because like you just sit there doing nothing, they keep doing this buyback, and your percentage ownership increase over time. This is not seen, you know. Dividend, you can see the money that flow into your account, but share buyback, you don't see it. It's not that obvious. And also every year they are not doing like 20% buyback, right? They're all doing small, like let's say 1%, 2%, 3%, right? But over years, right, if you hold it for like 10 years, right, you can see the share outstanding just keep on shrinking and shrinking. And that means your ownership percentage actually increase. So for companies that is generating a lot of cash flow and they do share buyback, I think this effect could be quite huge also. So that's my answer for those who say, oh, Apple 3 trillion, it cannot 10x. That's my comment. All right, let's move on. I'm very confused and uncertain about Tesla share price or current valuation. How priced in is the future profitability? Kelvin, you want to say something? Or before Kelvin start, I will just say, please watch the previous voice chat. We spent 2 hours to talk about the valuation. And then Kelvin is kind enough to share the Google Sheet just to show you how he has done the valuations. So you can try to understand the rationale, the input, and then if you have any questions, feel free to ask in the group, right? Yeah. Kelvin, you want to give any comment on this? Or Daren?
I'll start first, and then maybe Daren can add if I miss anything. The confusion, I think, comes from the fact that maybe you have not done really a very detailed valuation. But valuation is, like I said before, it's all also assumptions, right? So actually the uncertainty is also there. So there's definitely a lot of uncertainty there. But what the price is reflecting now is that there are more people who are more bullish on its future profitability than those that are not bullish on the profitability. So in my opinion, I may be wrong. I still think that there are still a lot of potential not priced in yet, especially even if you see that it's 1 trillion. But it all also depends on how far in the future are you looking at. If you are looking at just 2 years, definitely I think it's already priced in and it may even be overvalued. But if you are looking further ahead, I think there are still a lot of potential. But how large is that potential is still up for debate. However, having said that, I'm still very certain that the probability of Tesla the probability that Tesla now is still a good investment is higher than it is a bad investment. Okay, so that is just my opinion. But of course, you should look into it further. It's nothing wrong to being confused and uncertain, because that is in every investment and every decision that we make in investing. It's just being less wrong, being more right more of the time, then you will get a net positive out of it.
I agree. I think risk adjusted is a very safe investment to get into. There will always be other investments that give you higher returns than Tesla, because it's getting a bit more mature right now. But risk adjusted, I can see it in the next 10, 20 years giving a 30% to 40% return on average per year. For context, Tesla's returns in the past 10 years were 68% on average per year.
Yep, I think totally agree on the horizon. So if you are looking at short term, very difficult. 2 years might be really overvalued. but you need to like really have the patience to invest and then just track the companies. I mean, all the delivery numbers, the new cars that they're coming out, right? And then the expansion into other business like energy. You just track it over time, even if the share price doesn't go up, right? For example, doesn't go up for the next 1 year, and you see the fundamental actually improve, then I mean, nothing it's okay. What it's just like become like Amazon for me, right? You look at their metrics all improve. It's just that share price is not moving. It's fine. More time for you to accumulate, right? It's always good. Yep.
Let's look at the numbers tomorrow, late tonight or tomorrow. Maybe that will surprise everyone, and I think there will be more a positive surprise than a negative surprise, because there are already some people saying, they have information of China sales really very high, and you can see the European sales are very high. So let's just see, and then maybe you will be more certain maybe after tonight.
Yes, to build on Kelvin's point, so China sales in December, 70,000 vehicles. For context, that is basically almost Tesla's entire 2017 sales. 2017 it sold 70,000, what, 80,000 vehicles. And that is just China in 1 month in December.
All right, let's wait for the numbers. Looking forward to that. All right, continue. How much cash do you guys keep on the site? I find 6 months salary in cash pretty high, and the opportunity cost involved ridiculous. I'll go first. I think that, this 6 months salary you keep it in cash is not really like a war chest for deploy into investment, right? This is, the purpose of that 6 months is really like to secure, for example, if anything goes wrong and you need the emergency cash, right? Might be losing your job, or might be there's some cash needed, right? So you can tap on that. So of course, if you park it with cash, you are not getting a good returns. That is actually just the characteristic of cash. But it serves the purpose, right? Meaning that you don't need to be anxious about like, okay, what if I suddenly need a cash? I don't have the cash, right? So it's a bit like insurance. I'll say that. So if you already decided like, okay, you need to have this 6 months, and you know that the cash sit there, let's say there's a 2% inflation, or even 3 to 5% inflation, right? But it is just, you know everything beforehand, right? So, this is just a cost that you pay. But what you are getting is the so-called optionality, because if you want to count on other instrument, in times of like emergency, right? I think nothing can beat cash. So I think that's one thing. Second thing is also, in terms of the emergency, cash is not like the only one thing that you can do, right? Because you also need to see your situations, right? For example, if you are still young, and then you know that if you suddenly need cash, you can actually borrow from your parent. Stuff like this, right? Then you might not need that 6 months, right? So I think it really depends on each individuals, because if you don't need that, then you don't need that. For example, like I myself, I don't have 6 month cash sitting around, but that's it. That's just me. I think everyone has their own comfort level. So yeah, that's my take. Anyone else want to share on this?
I think this is just a rule of thumb. If not knowing how you have how your lifestyle is, so it's just a rule of thumb, because when people say suddenly you lose your job, right, you need around 6 months to get back on your feet. So it all depends on you, because some jobs are very sought after. So you can, if you lose your job, you can just jump to another job. But some jobs cannot. Like for example, maybe like blue collar jobs or labor jobs, right? If you are sick, you cannot straight away, get a new job, because you need to recover. So it all depends on the perception. And also, to have it in cash is not necessary. What they are saying is that to have it in a liquid asset, you can have it in yielding assets, but very liquid, like money markets, or like short-term deposits. All are considered cash, right? It's not just in the savings account, but you can put it in relatively safe, like maybe bonds should be also quite liquid, right? So that's just a rule of thumb. Don't take it like gospel, but you have to evaluate based on your situation and what kind of what dependence you have and so on.
Agreed. So I agree with the principle. The principle is sound. Like it means you need liquidity in an emergency. Where the situation can also change is it depends on what your current net worth. If you have more than 300k USD in investments, you're a wealth banking customer, which means the bank is literally your bank. If you need 200,000 in cash suddenly, the bank will give it to you at an interest rate of about 1 to 2%. If you're a wealth banking customer, especially in Singapore. In Malaysia, interest rate will be a bit higher because it's a inflation rate. And so to me, like personally, my cash is Apple stock because it's relatively stable. So it's my form of high liquidity that earns about a 20% return every year. If I need to buy something in short term, I'll sell Apple stock. That's what works for me.
All right, thanks for the sharing. Okay, let's move on to the next one. Since you all hold Tesla stocks for long term, do you all pledge your Tesla shares and at what percentage? I'm considering SCB Wealth Lending. Is it better than IBKR? I don't know about this SCB Wealth Lending. Daren, you are using this bank, right? Or which one? You want to comment on this?
I'm using DBS Bank. So every bank, they put their own like ratio on different types of stocks. So example, like DBS will give me an investment loan based on a 50% ratio of Apple Tesla stock because they see Tesla is more volatile. Whereas for Apple stock, they'll give me a 1-to-1 ratio. It means, let's say I own 100,000 of Apple stock, they'll give me 100,000 investment loan. If I own $1 million in Tesla stock, they'll give me $500,000 in investment loan. So that's how it works for DBS. The interest rates are about 1.2, 1.3% right now for me.
Okay, thanks. But this one, I don't have anything. I don't do all these pledge shares. So I don't know. But I think worth to find out. And I also don't know like what we are trying to do here, right? What do you mean by pledge? Do you mean like pledge the shares and then get more borrowings, become a leverage
it's a
position?
margin account effectively. So they pledge the the shares as collateral, and they can take out a certain percentage as cash and do whatever they want with it.
Is it better than IBKR?
What are the rates for IBKR?
I think USD is 1 point. What?
I heard it's about 1.3, 1.5, right?
Yeah.
Well, I guess it's slightly cheaper because SCB is like what is it, a cost of funds plus 0.5 or something like that. Yeah, so it's I mean there's not much difference. It's still around 1%. Yeah, there's not much difference. It's about 1% right now. So
then I think the difference is on the margin, right? For example, let's say the share price just dropped quite significantly. I think for IBKR, you don't get someone to call you. They will just liquidate for you if you don't hit the margin requirement. But I don't know how it works for this like SCB or DBS.
SCB, the RM will call you. The RM will call you. Yeah. So the RM will call you, or not just the share price can drop, but also the LTV margin ratio can drop suddenly. Then they will call you definitely. Yeah.
Don't pick up.
The only thing I don't like about the SCB one is that it's like if you try to invest in index funds, right, like S&P 500, they give you like very low, like 30%, which is quite ridiculous. Yeah. Because it's supposed to be safer, right? But they only give you 30% margin.
Yeah, I mean, like what? If you say if you compare to DBS, right? I think DBS is actually quite you say very generous. I would say from what Daren said just now. I am with HSBC, and they can also change it on a whim. When I started, they say you can pledge US equities, but this year they say suddenly US equities not eligible. So there's a danger of that as well. So just to warn everyone.
HSBC US equities has not been eligible for almost a year already.
Yeah. That's what I heard. Yeah.
Yeah.
So that's not new. The only thing you need to watch out for DBS is DBS is the facility works as a term loan. So it's not so straightforward as I take a loan today, I want to pay back tomorrow. It's a term loan, right? So you have to first decide on the tenor upfront, and then you have to commit to it. And in some cases, right, if you pay back early, there's a penalty. Yeah, that's what my DBS RM tells me.
Very good to know. Yeah, I just started HSBC recently, so I didn't know that the US equities were not eligible, because in their brochure they said.
Along. I mean, the last 1 year already. It's been like this for the last 1 year for HSBC.
Yeah. So that okay. Yeah. Because I saw their brochure, and then after I opened the fact, then they told me it's not eligible. But yeah, great to know.
Yeah, but the thing about all these facilities that you can. It's not as generous as a traditional brokerage, like your Vickers or your whatever traditional brokerage, in terms of how much you can take out. But the benefit is that you can take out the money and do whatever you want with it, right? You can buy a car or whatever, so it's cheaper than a car loan.
Yep, makes sense. Very interesting. They just want to secure the interest that they earn. If you terminate early, they penalty you. Okay, I think just last one. Okay, I think last question for today. How you guys cope with buying stocks now and not predict the next big dip when you know you could have bought cheaper earlier this year? Anyone want to go first? If no, I'll go again. I think in investing is always forward-looking. So if I know what numbers will come up with Singapore Pools total, right, then I can also bought and win it, right? So, it doesn't make sense to look at what happened in the past. You need to, as in, you look at the past to have a sense on the history, to have a sense on what's happening. That's definitely something to help you with the expectation moving forward. But let's say, just because the stock goes up by 50% and then you say, okay, you could have bought it earlier, right? Yes, you could have bought it, but whether you bought it or not is different situations, right? You should just look at what is the price today and then what is your expectation on the companies moving forward, and just do the discounting and see whether it is something that you want to invest on. Don't focus on too much on like, okay, one thing is don't focus too much on waiting for the big dip because I can almost sure that those who like keeping a lot of cash, they just want to wait for a big dip, right? They will just keep on waiting, because how many percent dip that you are waiting for, right? It can dip for 20%, then you are waiting for another 5%, right? And then dip another 25%, then you still keep waiting. So then the longer you wait, the higher chance that the market will just continue to go up. Just track the companies. Unless you look at the companies, right? Then you see all the companies is not doing well, their growth, all the growth going down, recession, very tough, then profits all screw up, then the entire, all these corporates doesn't make sense to own it, and the price still remain high, and you want to wait. I think that make more sense to wait. But right now, I mean, all these companies that are doing well, right? They are doing very well. They have a product or services that is really adding values to their customers. And then they are very sticky. And you just look around, those who want to upgrade their phones, they will just keep buying the new one, right? You don't see that, okay, like people just say, okay, Apple cannot their product getting worse and worse. They just shift to other manufacturer. In that situation, I would say, okay, then don't stop buying the shares because the companies, their product, their innovations is already going downhill, right? So pay more attention to the companies, looking forward looking, and just invest accordingly. And between, let's say, average up and average down, I would just say average up is always better, because you have an assessment, you have a view, you invested, share price go up, right? It means that it is validated, because now more people actually agreed with your assessment. So don't say that, okay, because the price had already went up, hence I cannot buy anymore. I can only average down, can I average up? I think that doesn't make sense, because when you are right, you can always keep on adding to your position and build a larger allocation. So at least that's my approach. So you see, I very rarely sell. And for the companies that went up, right, I think can take Nvidia as an example. I bought Nvidia, I think early 2020. Prices just keep going up, right? But if I see that price up as a signal for me not to continue to buy, then I will earn a lot less, right? But because I know that, okay, one thing is the fundamental has been improving, and then I got some validation. You know, even the share price is more expensive, I just continue to buy, and it turned out to be a good decisions, right? But that's one example. What I'm trying to say is that don't just like make decisions based on the like past 12 months. Like look at the share price go up and keep hoping that it will go down, or the other way around also doesn't work. So you drive a car, you're looking forward, right? You are not looking at the rear view mirrors, right? So I think that's just something that I would share. Anyone else want to chip in on this?
Follow Nancy Pelosi on Twitter and buy her trades.
That one is always good one. Best insider trader of the year. Whoops. But her name doesn't come out as often before this, you know. Like let's say, just rewind back 1 year ago, right? Everyone is talking about Katie Wood. No one cares about Nancy Pelosi. It's always after all the successful trades, and then her name came out, right? And now you see, no one want to follow Katie Wood already. Then 12 months later, who's the next Nancy Pelosi, right? We still don't know. So, but very interesting because she's a politician, right? So I think that makes it much more interesting compared to Katie Wood. All right, I think we'll close the call now. It's already 1 o'clock. Thank you everyone for joining in. Thanks a lot to Kelvin, Daren, Eddie, for those who chip in. See you in the next one. I'll post the video later. I'll share later. Thanks.
Happy New
Thanks
Year.
a lot.
Have a good weekend, everyone. Bye-bye.
Happy New Year.